Welcome to this week's live ASX strategy session. Thanks for joining me. Great to have you with me as always. Lots of interesting stuff to go through this week. Going to kick off with that ASX 200, see what's going on there. We've got the small caps to have a look at. There's a really interesting shift in a key segment of the market I want to have a talk about. And then we've got the commodities. We've got gold, copper, we've got oil in there, we've got iron ore, and of course a bit of uranium too. So and a couple of stocks, a couple of interesting stocks I want to have a talk about. We'll do some Q&A, but of course, as we usually do, we'll save the Q&A till the end so we keep the flow going through. And as always, everything today is general commentary only. Doesn't take your personal situation into account. So if you need personal advice, you need to go and speak to someone who can give you that personal advice. This is all general only. Okay, well, with that said, I think we might get into that first chart. So I've got the ASX, I've got the ASX 200 up on the screen, and it's been. Let's zoom this out a bit. It has been. It's been a messy week, but it's also been, I think, a productive week overall. So the ASX 200, it's whipped around a bit over the last, since this time last week. Sold off early in the week, so Monday and Tuesday sold down towards that 100-day moving average. And then from there, we've had a rebound and a rally back. So it's interesting that the ASX 200 is moving in a wider range than we're seeing in the S&P 500 and the Nasdaq. It's almost double the range we're seeing in those key US indices. I think that when I look at this ASX 200, well, it's gotten through a key resistance area through the week, 7,100. And that marks, of course, the lower end of that big trading range that the market moved within for many months during this year. So it's moved back above there. And the other positive thing is that it's cleared this November high. So what we have now, we're seeing this sequence of higher highs and higher lows as this market transitions through the last few weeks. And of course, when you look at that, when you see those sequences of higher highs, higher lows, that's of course the building blocks of an uptrend. That's what we look for. That's what we look for in a market that we think has that potential to move within large and sustained upward moves. You want to see that sequence of higher highs and higher lows. Other point to note is that the moving averages are turning higher. You'll see this 100-day moving average beneath, and then the 50-day. And you can see they're both rounding higher. They haven't crossed yet, but they're moving in that right direction. First step is to see them round higher and get the price above them. And it'll take a little bit more time to get across, if we get across, but that's all moving in the right direction. I think we can see from this that the momentum does seem to be shifting to the upside. So, but look, any way I look at this chart, if we just compress it a bit, go back, get in a bit more data. I think any way you look at this, it really still is a mess. It's a messy chart. The price action's messy, and that's just the nature of these big trading range. They're tough because they lack that consistency in their overall direction. Now, I want to quickly jump over to a weekly chart just to put some perspective around where we are. So here we go. Here's the last 2 years. I'll actually put a box around that. Let's put a box around the last 2 years. And really, this has been the longest corrective period. You can see the price contained within that box. We move this box through time, you'll see that no other corrective period actually fits within this box where it's just gone sideways for so long. You've got to come all the way back here to 2010, 2011 to get the same sort of like length of consolidation. Prior to that, you've got to go back to 2001, 2002. So it is just one of those times. They don't come along that frequently, but when they do, you've got to let them work their way through. It's part of the market cycle. I think the odds favour that we ultimately get an upward resolution from this big sideways period, but we just don't know when that might be. It could happen in the coming months. It could be longer. We don't know. And so I think the play here, based on that, I think the play here is to buy into upward momentum when we get upward momentum. Because as I was saying, we don't know when this period may end, but we do know that it almost certainly will end, and we don't know which momentum surge will lead to the next big trend. So we've had several false starts in the months gone by, and we've got this latest momentum surge. So is this the one, or is this just going to be more chop within a range? So we don't know that, and we can't know that. So for me, it's about buying stocks that are above their moving averages and have that upward momentum. So in the event that prices do run, we're getting on board. You're getting on the stocks which then have the potential to continue running and to run quite well. But if it turns out that this is just another false start, well, that's where we use the risk management. So if this rally fizzles out, comes back down, back into the range, it's those risk management strategies which really help minimize those losses. So the idea being, if the market runs, we want to be on the stocks which have the potential to go a long way, but if it doesn't run, we don't want to lose a lot. So that's why we use that risk management to reduce exposure should this rally not go on and produce too much. I'll show you the type of stock I'm looking at a moment. I'll show you the type of stock that I'm looking at in a moment, and you see the sort of setup. It's not unique to one particular stock. It's just a type of setup which I like to look for. Now, if you're getting some value from this, please hit that like button, leave a short comment. Even if you're a strategy session member, leave a comment for me. Just let me know that what I'm doing, you're getting some value from it. It is good to know. Really like to hear when I'm helping out. What I'm saying is useful. And you remember, hit that like button. If you're not a subscriber to the YouTube channel, click the subscribe button. Now, I'm going to show you something really interesting in a sec, which is happening to a key sector, and I think it has implications for the market generally. And of course, I've got that small orders, got those commodities. I'm going to show you something interesting in gold, something I think you need to be aware of if you're playing the gold long trade. And those couple of stocks I want to show you. But of course, that wraps up the free section for today. So I'd love you to come with me. If you're not a strategy session member, come in for the rest. All you got to do is click that link below the video in the description section. Come as a strategy session member. Doesn't cost you much. It's just like bringing me along a coffee for preparing the rest of the session for you. So yeah, do that. Think about doing that if you're not a member already. Now let's get into the next section. Let's go over. I want to go over and have a look at the small ordinary.